Hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you and sponsored by Orbex. Now, as you know, we have the very important US CPI figures today. So it's an important data because then speculators will know in which direction they should turn regarding the US yields and the US dollar. As you know, if the CPI or inflation data will start slowing down, then it will mean actually that there will be maybe limited hikes from the Fed in the future, and this could potentially be supportive for stocks while the US dollar could sold off. On the other hand, if CPI or inflation will still remain in upwards, maybe headed even higher, then obviously it means that Fed is not enough aggressive, and it means that even more hikes should be seen in the future, and speculators will obviously then bet for higher US yields, which would also bring US dollar higher as well. So we'll see how this will play out. As you know, this data will be released 1 hour ahead of the US cash market open today. So make sure that you will adjust your positions accordingly. I'm thinking that there will be some volatile moves. Of course, till then, just be aware of more choppy price action. So firstly, the euro dollar, still a very big level here on a higher degree time frame charts. It's the 78.6% around parity. Then you have the 0.9 level, which was the latest intervention by the ECB back in 2000. So we'll see if euro dollar could stay under pressure. What's the most important for me at this stage is that I can count 5 waves down, okay, from that 106.20 level. So these 5 waves of decline suggest that market is approaching some support. So even if the upcoming recovery will be slow, choppy, and still correction within higher degree downtrend, will still just be aware that this downtrend may not continue just in a straight one leg. There will always be some pullbacks, like we have seen in the previous example. So I'm just aware that there could be some pullbacks before selling off. If we see any recovery back above 103.84 or 103.80, then I think that important bottom will be in place. But for now, that's still not something that we want to look for. We are just aware that there can be limited weakness, but we'll see how or what the US CPI data will do with the dollar or euro in general. Also, what I said at 103.80 around there, it's important level. Well, I also have an alternate count where it suggests that euro dollar should stay in bear trend as long as we are trading below this trend line resistance. Notice that here I'm looking for a wave 1, wave 2, and this latest current drop is wave 3, which can be an extended lag. So watch out for a wave 4 rally. As I said earlier, it could be just a temporary rally from current near-term levels before markets see more weakness. But if this bearish trend will remain in progress, then obviously wave 4 should not move into the territory of a wave 1. And notice that this level is also around the previous lows here, so it's quite important level. So technically speaking, as long we have lower highs and lower lows, well, this is still a downtrend. But of course, it would be completely different if we break back above the previous lows and let's say make a daily close above or around 104. Then obviously I think that bottom could be identified. But for now, that's simply just not the case yet. It's just observation, and we'll see how the price action will unfold. Now, from a trading perspective, yes, I would be looking for new shorts if we would see, let's say, only a 3-wave recovery, something like this, just a slow choppy price action back into this wave 4. Then I think that there can be very nice confirmation or evidence that yes, this is just a corrective pose within the downtrend. If we'll see, as I said, very sharp rise and in 5 waves back above this level, then I think that buying pullbacks could be the case here. Now let's take a look also on this chart. It's that I covered already last week. It's the US dollar versus the US yield. As you know, market has made some negative correlations recently, and notice that this has been the case back through January and March. of this year. But notice when the 10-year US note stopped at this resistance and we have seen a breakdown, well, what happened is that US yields turned higher with the US dollar. So now we have a very similar path. There was a divergence between US yields and US dollar, and you see the 10-year US notes moving into this very strong resistance. So if this channel or bear flag, if you want, is going to be broken, then I think that US yields will see more upside, and in such case, US dollar will stay in the bullish trend. Of course, this could happen if the CPI data will come out strong again. Okay, if the inflation will slow down, then obviously this resistance could be broken, and if this resistance would be broken, then I think that US dollar could see a top. And in such case, what I would be looking for is dollar yen. Okay, why dollar yen? Because we have some interesting technical developments here. So firstly, to give you the full perspective, while I'm tracking the final stages of an extended wave 3, we are at some serious fib levels. It's also the upper channel resistance parallel line up here. So definitely very strong levels. And why I think that there can be some slowdown coming is because on the 4-hour time frame, we also have this potential wedge formation. And you know that wedge formation usually will occur at the end of the trends. It's an ending diagonal, and if that's the case, then when volatility or is coming back, usually this momentum and sharp moves will occur in the opposite direction. So in our case, that means to the downside. But of course, it's very hard, not easy to make such prediction. But of course, the wave count remains valid as long we are trading below 140. Why? Because in Elliott wave terms, okay, wave 3, which is this one in the middle, should not be the shortest. But notice that wave 3 is already shorter than wave 1. So if that's the case, then for a valid substructure, well, wave 5 must not be longer than wave 3. Okay, I hope that makes sense. So anywhere below 140.20 or around there is valid formation for an ending diagonal. You could see a throw over here, retest of this upper trend line, and then a sell-off. But from a confirmation point of view, what I would love to see is broken trend line, and then possibly even daily, weekly close below 134.77, which was a swing wave 4 level here. So if we can see that, then obviously more weakness could be seen. But as I said, watch out the 10-year US notes. That resistance clearly should be broken to help dollar yen to come down with the US yields. Okay. Now let's take a look also on Kiwi. Now I've been short Kiwi recently over the last 2 weeks or so, and I think that now it's time maybe for market to slow down a little bit. Why? Because markets are not that, this pair is not that volatile, despite Bank of New Zealand raised rates by 50% basis points. So I think that this recent weakness that we have seen on New Zealand dollar versus the US dollar was probably because speculators already bet on this rate hike. Unemployment is still very low, but they they are targeting between 1 and 3% inflation in New Zealand. So until this is achieved, they will be looking for higher rates. However, the recent sell-off that we have seen over the last weeks, I think that this hike was already priced in, and that's why we haven't seen any real price or real strong price action here. So I'm potentially tracking here final stages of this bearish cycle down from June highs. We'll see how this will unfold. Potential wedge here could be playing out. I also have another wave count. If maybe this wedge is going to be invalidated, then also watch this line chart. Very nice clear subdivisions in 5 waves here from the recent swing high. Notice that clearly this trend could then be coming to an end very late stages. So even if we see again just a temporary pullback, just be aware there can be a rally in 3 waves before further weakness here. Okay. Also, if euro, let's say that after CPI data euro will remain weak, then I think that what you should look for is potentially some euro crosses. Now here I still like the idea of EURUSD to see more weakness. There was a very nice attractive bounce here over the last 2 months or so. It was unfortunately in a corrective manner. So this means that euro will most likely depreciating versus the Australian dollar. What we are seeing here is a broken trend line, resistance, support. So I think that more weakness could be seen. In fact, if you look closer here on the 4-hour chart, well, notice that there was a very nice corrective rise here with the expanding diagonal here at the end of this trend, and now we are breaking this channel support, so clearly more weakness could be seen. But again, if you want to be on the short side, just keep in mind that this pair has a some very big ranges, and that there can be some pullbacks coming. So why I'm talking about the pullbacks? Well, because notice that here below I have the dollar Chinese yuan versus the euro Aussie. Why? Because Chinese yuan holds a very strong correlation with Australian dollar. So if this market is going to see more weakness here, that's when this euro Aussie could see also more weakness or continuation lower. However, what I'm seeing on dollar Chinese yuan is a potential triangle here. So just be aware that there can be a spike to the upside to a new high before market turns to the downside. And this could actually, if we really would rally on dollar Chinese yuan, this could actually trigger a pullback here on the euro Aussie. So that's why I'm saying just be aware of these pullbacks. Also important trend lines like this one could be retested. It already happened once here at 1.5 level around there. Then you have 1.51 coming even higher if we see a rally in 3 waves. That's the area where I would be looking for limited strength here. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.